Okay, we're going to wrap up chapter 13. Section 13.3 is fire insurance. We're going to define the terms policy, coverage, face value, and premiums, find the annual premium for the fire insurance, use the co-insurance formula, understand multiple carrier insurance, and list additional types of insurance coverage. All these are fairly simple to do, so I'm not expecting any trouble for this section. But of course, if you do have any trouble, please make sure that you email me. Insurance protects against risk, fire, theft, liability against a lawsuit or catastrophic event, auto accidents or liability, life or death. All right, policy. Contract between an owner of a building and an insurance company. Coverage. Protection for both the owner of the building and a mortgage company. Homeowners policy. Covers contents of buildings and liability insurance. Face value. Dollar value of the insurance coverage. Premium. The annual cost of the policy based on age, materials used to construct crime, rate of the neighborhood, presence of safety features such as a sprinkler system, security system, history of previous claims. Amount of the premium charged by the insurance company depends on several factors. Type of construction of the building. So I believe that would mean like a difference between like brick versus wood, that kind of stuff. Contents and use of the building. Location of the building. Type and location of any fire protection that is available. Underwriters, they work for insurance companies and they are the ones who assign a classification to a building. Territorial ratings, rating that describes the quality of fire protection in the area. Annual rates for each 100 of insurance. So this is similar to what we did last section. The example they're showing us here is like territorial rating 4, classification C, building and contents. So it'd be 84 cents and 90 cents for the contents. So let's check this example out. The Dollhouse is a building rated Class C. It is in Territory 4. Find the annual premium if the replacement cost for the building is $640,000 and the contents are valued at $186,500. So, if the building replacement is in hundreds, then it's 6,400 in hundreds. And the premium would be times the 0.84. We got that from the other slide. So that's 5,376. The replacement cost in hundreds for the contents would be 1,865 hundreds divided by the 0.90 would be 1,678 and 50 cents. This 0.90 coming from the other page. So we take those two and we add them together and we get a total premium. This is probably per month of $7,054.50. Replacement cost refers to the cost to replace or rebuild a building in the event it is completely destroyed. Many buildings cost more to rebuild than the fair market value. So if that's the case, that you end up just getting the fair market value. Co-insurance clauses. Clause that requires the owner to have an insurance policy in effect with a face value that is at least 80% of the replacement cost of the building. This is in addition to what you're paying for, by the way. If the policy has a face value greater than 80%, then the insurance company pays for all losses caused by a fire. If the face value is less than 80%, then the insurance company will pay only a portion of any loss. The most the insurance company will pay is the smaller amount of the loss on the face value of the policy. Finding the amount of insurance will pay. Amount insurance company will pay, assuming 80% co-insurance. So the amount lost times the amount of the policy divided by 80% of replacement cost. So let's figure this out using an example. Dayton Properties owns a small apartment building with a replacement cost of $760,000. The fire insurance policy has an 80% co-insurance clause and a face value of $570,000. A fire started in the kitchen of a tenant and swept through 3 apartments, resulting in $140,000 in loss. Find the amount of loss that the insurance company will pay. So the face value is $770,000. Is less than the 80% of the replacement cost of $760,000 or $608,000. So the insurance company will only pay a portion of the loss. So the amount the insurance company will pay will be the $144,000 times this factor here, which is $135,000. So the amount the insurance company does not pay is $9,000. So then the property is responsible for the $9,000. Let's look at this example. A Swedish investment group owns a warehouse with a replacement cost of $3,450,000. The company has a fire insurance policy with a face value of $3,400,000. The policy has an 80% coinsurance feature. If the firm has a fire loss of $233,500, find the part of the loss paid by the insurance company. So 80% of the replacement cost would be 0.8 times the $3,450,000, which is $2,760,000. The business has a fire insurance policy with a face value more than the 80% of the value of the store. Therefore, the insurance company has to pay the entire $233,500 loss. And that is why it's always better to pay it up front, man. A business may have policies with several companies at the same time. Additional policies may cover additions to the building, or perhaps the building is so large one carrier does not want to cover the entire building. Each carrier pays its fractional portion of the total claim to the property. So let's see an example about that. Youngblood Apartments has an insured loss of $1,800,000 while having insurance coverage beyond its co-insurance requirement. The insurance is divided among Company A with $5,900,000 coverage, Company B with $4,425,000 coverage, and Company C with $1,475,000 coverage. Find the amount of loss paid by each of the insurance companies. You guys will have to do this for your homework, and I imagine also on your quiz and exam, so I would definitely pay attention to it. Start by finding the total face values of the 3 policies. So total face value is equal to $11,800,000. So Company A will pay 1/2 of the loss. Company B will pay 3/8 of the loss, and Company C will pay 1/8 of the loss. And that does equal all of it. The insurance loss is $1,800,000. So Company A will pay $900,000. Company B will pay $675,000, and Company C will pay $925,000. So the total loss is the $1,800,000. So they are getting everything covered there. Disability pays monthly payments in the event of a disability. Homeowners pays a homeowner in the event of a fire, theft, or accident. Liability protects a business owners against a lawsuit. And long-term care pays for nursing home costs. Medical pays for medical expenses. Renters protects a renter against loss of personal property. I can tell you that I have been paying renter's insurance for probably over a decade at this point. It's extremely valuable to you. I pay like maybe $18 a year. I'm telling you, like, it's stupid cheap, but it can cover you up to like $100,000 or more in personal damages and replacements. So it's definitely worth it. Workers' compensation pays employees for injuries while on the job. And that is it for this section. Remember, if I said if you have any questions, make sure you email me. Okay. Section 13.4, motor vehicle insurance. Go ahead and take a look at your objectives. I'm not going to read them out to you. We are going to go through it all together. All right, so describe factors that affect the cost of motor vehicle insurance. The premium or cost of an insurance policy is determined by actuaries who look at the frequency and severity of accidents based on several factors, including location of insured vehicle, age and sex of the driver, miles driven, and driving history of the driver. Liability or bodily injury insurance protects the insured. In this case, he or she injures someone with a car. Expressed as a fraction, such as 15 over 30 minus, or 15 over 30. Insurance companies will pay $15,000 for injury to one person and a total of $30,000 for injury to two or more persons in the same accident. Medical insurance included in the liability. Liability or bodily injury insurance protects the insured in the case that he or she injures someone else in the car. All right, liability, injury, and medical insurance per year. So here again, we have our territories. Here we have these differences. And then in here are your premiums. Honestly, if it were me, I'd probably go with this high end at this point. All right, here's our example. Martha Spencer, owner of the dollhouse, is in Territory 2 and wants $100,000 for one individual, I guess, and $300,000 for two or more liability coverage. Find the amount of the premium for this coverage and the amount of the medical coverage included. So you come down to Territory 2, you go over to the amount, and you can see from the table that the annual premium is $378 and it includes $5,000 for medical expenses. Right? Property damage coverage pays if you damage someone else's property, such as an automobile or a building. So again, here's our territories, here's our amounts, and remember this is per year. So again, why not go with the high end? Have yourself covered. Find the annual premium if Martha Spencer in Territory 2 wants property damage coverage of $50,000. So Territory 2, $50,000, $223 a year. Are we getting how easy this section is? Comprehensive insurance pays for damages to the insured vehicle caused by a fire, theft, or theft of the automobile, vandalism, someone purposefully scratches off the paint, or a tree falling on the automobile, and by other similar events. Collision insurance pays for repairs to the insured vehicles when it is involved in a collision with another object. Deductible, you choose the deductible for both comprehensive and collision. Higher deductible results in lower premium. If you pay the deductible, insurance pays the balance. So here again, we have our territories. Here are our age groups. This is for comprehensive and this is for collision. Let me tell you, when I did the homework for this chapter, this was the only confusing part. You have to do this kind of twice. You have to do it once for comprehensive, then to do it a second time for collision. That's the only thing that really gave me a hard time with this chapter. All right, once again, Martha Spencer is the owner of the dollhouse. It's in Territory 2, has a 2-year-old minivan that has a symbol of 8. Use the comprehensive and collision insurance table to find the cost for comprehensive coverage and collision coverage. Comprehensive coverage is $68. See in the next slide. Collision is $98. Again, see the next slide. So, Territory 2. Age group was 2 years old. The minivan was 2 years old. Symbol is 8. So you go Territory 2, age of the car, symbol 68. Same thing, Territory 2, age of the car, symbol 98. All right. We all good on that. I think that's pretty easy. No fault insurance, all medical expenses and costs associated with an accident are paid to each individual by his or her own insurance company, no matter who is at fault. States that do not have no fault insurance require that the insurance company of the person at fault to pay the damages. Pennsylvania is definitely an at fault state, So whoever is determined to be the individual who caused the accident is the one who will pay, whose insurance will pay for it. You can try and fight it, but basically once these insurance companies make up their minds, they just up your rates and they've made their decisions. Uninsured motorist insurance protects a vehicle owner from financial liability when hit by a driver with no insurance. Underinsured motorist insurance provides protection to a vehicle owner when hit by a car uh, by a driver who has too little insurance. Again, Martha Spencer, Territory 2, wants uninsured motorist coverage. Find the premium in the table. So Territory 2, basic limit, $219 per month or per year. So at this point, this lady's paying a lot of money for her annual payment. Apply youthful operator factors. Insurance companies charge higher rates for youthful compared to adult drivers. I believe, yep, 24 is the cutoff, basically. Statistics show that drivers under 25 are far more likely to be involved in a fatal automobile accident than drivers 25 or older. Trust me, once you hit 25, you are so much happier when you're looking at car insurance. The table gives youthful operator factor, which is multiplied times the total premium for all coverages desired. So let's look at this example. Janet Ito lives in Territory 4, is 22 years old, and has driver's training and has had driver's training. Has never received a ticket or been involved in an accident, and drives a 5-year-old car with symbol 7. She wants $25.50 liability policy, $2,000 in medical expenses, $10,000 property damage policy, comprehensive and collision policy, and uninsured motorist coverage. Find her annual insurance premium using the tables in this section. So, again, you would have to go back through all the slides or pause them or do whatever, or just look at your textbook. You'd have to use all the tables. Determine the total premium for all coverages desired. So $25.50 liability would be $362. $10,000 property damage is going to be $185. Comprehensive insurance is $38. Collision is $84. Uninsured is $285. So her total for the year is $954. Now, though, you have to take that $954 and multiply it by the fact that she is a youthful operator with driver's training, thankfully. So her total for the year now is $2,003.40. Now, if she was over the age of 25, it would only be $954. All right. Find amounts paid by the insurance company and insured. If you are at fault in an automobile accident and the damages exceed the limits of your insurance policy, you may be personally liable for the excess. So this is going to be an example of that. James Benson has $25.50 liability limits, $25,000 property damage, and $500 deductible collision insurance. While on vacation, he was at fault in an accident that caused $5,800 damage to his car, $3,380 in damage to the other car, and severe injuries to the other driver and his passenger. A subsequent lawsuit for injuries resulted in a judgment of $45,000 and $35,000 respectively to the other parties. Find the amounts that the insurance company will pay for repairing Benson's car, repairing the other car, and paying the court judgment resulting from the lawsuit. D, how much will Benson have to pay the injured parties? So they're already assuming at this point that he's going to have to pay some money. This is why you need to be very, very careful with what you do on vacation. You can't just fool around, and you definitely want to make sure that you are insured. The insurance company will pay $4,800. That's because he has a $1,000 deductible to repair Benson's car. Repairs on the other car will be paid to the property damage limits of $25,000. Here, the total repairs were $3,380, so those are all paid for. Since more than one person was injured, the insurance company pays the limit of $50,000, $25,000 to each of the two injured parties. Benson is liable for $30,000. $80,000 minus $50,000 will give you the $30,000, the amount awarded over the insurance limits. So That's pretty epic. That's like, oh, I apologize. I told you my allergies are insane right now. But that's basically the cost of a down payment for a house that this guy's going to have to pay throughout time. Really sad. Okay, last section of the semester. Section 13.5, life insurance. Again, go ahead and take a look at your objectives. We're going to go through them all. Term insurance, lowest cost type of insurance, does not build cash value, renewable until specific age, often 70, and protects against early death. Level premium remains constant for a period of time, 10 or 20 years. Thereafter, premiums increase rapidly. This is, by the way, is for life insurance. Decreasing term insurance, fixed premiums to age 60 or 65, but amount of life insurance decreases periodically. Whole life, straight life, ordinary life, or permanent provides a death benefit and a savings plan. Pay a consistent premium until death or retirement, whichever comes first. If policy is enforced at time of death, a death benefit is paid. May convert cash value to a retirement benefit. Universal Life provides the life insurance protection of term insurance plus a tax-deferred way to accumulate assets. Establish a permanent policy to lower premiums than whole life. Gives insured more flexibility, more insurance while children are young, then accumulate savings after children are grown up. Variable life allows policyholder to make choices among several investment options. Places investment risk on the policyholder by allowing insured to invest in money markets, bond funds, stock funds, or a combination of the three. Limited payment life insurance, similar to whole life, but payments are made for a fixed number of years, such as 20. Premium is higher than whole life. Appropriate for athletes, actors, and others whose income is likely to be high for several years, then decline. Endowment policies. Most expensive policies since they accumulate cash more rapidly than the other types of policies. Guaranteed payment of fixed amount to a given individual whether or not the insured lives. Used by parents for college funds. Least popular policy because of expense. Calculations by actuaries are based on statistical data involving death rates, interest rates, and other factors. Women tend to live longer, so they pay a lower premium than men. Annual premium, number of thousands times rate per thousand. So for women, subtract 5 years from the actual age. For example, rates for a 30-year-old woman are shown for age 25 in the table. All right, our ever famous example for chapter 13, apparently. Martha Spencer, which, if you forgot, is the owner of the dollhouse, became the primary source of income for her family at age 35 after her divorce. At that time, she decided she needed $250,000 in life insurance to pay off the mortgage of her home, to repay some loans for her business, and to provide for her children. Find her annual premium for A, 10-year level premium term policy, B, a whole life policy, or C, a universal life policy, and D, a 20-year life plan. First, divide the desired amount by 1,000 to find the number of thousands. So 250,000 divided by 1,000, chop off the last three, 250,000. Spencer is a woman, subtract 5 from her age. So instead of looking at the row for 35, we're going to look at the row for 30. So we get 1.89. 250 times 1.89 is $472.50. That would be for this A option. For B, you're going to take the same factors, but you're going to multiply it by 5.66. So it'll be $1,415. For universal life, you're going to multiply it by 6.08. So that'll be $1,520. And then for the last one, you're going to multiply it by 18.78, which is $695. Any questions on that? Because you will have to do it. Many companies give the insured the option of paying the premium semi-annually, quarterly, or monthly. For this convenience, policyholder pays an additional amount that is determined by the premium factor. So semi-annually, quarterly, or monthly. If you pay it annually, you do not have this extra factor. The annual insurance premium on a $200,000 10-year level premium term life policy for Jane Rodriguez is $378. Use the premium factors table to find the amount of the premium and the table annual cost if she pays semi-annually, quarterly, or monthly. So you just take her annual amount, $378, and multiply it. And then that makes it, you add that on. So then per year, it'll be $385.56 if she's doing it semi-annually, $393.12 if she's paying quarterly, and $411.84 if she's paying monthly. So you can see there that you're going to save the most money by just doing the annual payment. But again, some people can't afford that, so they do it the other ways. Or I guess they think they can't afford that, so they don't do the math. Obviously, you can see that having that lesser amount for the year would make more sense. Shauna Jones has decided to buy $100,000 in life insurance to make sure that her kids will have funds if something happens to her. Jones is 28 and in good health. Find the monthly premium for a 10-year level premium term and universal life. So again, divided by 1,000, you get 100. Subtract 5 for her age. We're looking at line 23. From the table, we get 100 times 173, and then we'll do 100 times, I believe, the whole life, which would be 445. And then the factor, she's doing it monthly, so her total cost is going to be $15.71 for the month. For that one, for universal, she'll do $456, then times the monthly factor, so it'll be $41.40. All right. And that is it for your business math lectures. And again, if you need anything, shoot me an email. At this point, you have all the knowledge and background to do your assessments. So you have until the end of the semester, but you definitely have a lot of time to get stuff into me. And remember, you can always turn stuff in for corrections. All right. I look forward to seeing everybody for a touch base next Tuesday. Have a great weekend.